Get the latest Zacks research, analysis, and rankings on exchange-traded funds in Exploring ETFs. Top dividend ETFs for 2013 is what we're going to talk about now with Nina Mishra, our ETF research director here at Zacks. So you say dividend ETFs may outperform the broader market this year. How so?
After the fiscal cliff resolution and clarity on dividend taxes, the tax rate is not going to go up for most of the investors. Dividend ETFs and dividend stocks are back in focus. They are back in popularity. And we saw increased inflows in dividend ETFs during the month of January. So I think they are going to outperform the broader markets. It makes sense to invest in them this year.
Okay, so a lot of U.S. corporations are still sitting on huge piles of cash, and they're in a position to increase payouts to shareholders. This is a positive thing too, right?
Yes, that is another reason for investing in dividend ETFs. In 2012, the dividend payouts were 17% more than in 2011. And S&P estimates that this year is going to be another record year for dividend payments. So dividends are going up. U.S. corporations have a lot of cash. They are in a very comfortable position to increase dividend payments. And another reason why it makes sense to invest in dividend ETFs now is because the interest rates may finally start going up this year. The Federal Reserve may either slow down or stop asset purchases this year. And if the interest rates start going up, the bonds are going to incur a lot of losses. So it makes sense for the retail investors to stay away from Treasury and corporate bonds this year and better invest in dividend ETFs for their income needs.
Okay, so when investors are looking for dividend ETFs to invest in, what should they look for? High yield or high quality?
There is a choice of about 50 dividend ETFs available to the investors. And it really depends upon their risk-return preference, whether they prefer high yield or high quality. I prefer and I recommend high-quality dividend ETFs because they invest in companies that have solid fundamentals, a lot of cash, and they have a lot of potential, capital appreciation potential going forward, rather than the dividend ETFs that focus on yield only and invest in companies with not so solid fundamentals. And higher quality companies, they also are mature and they provide stability to the portfolio in volatile environment. So it makes sense to invest in dividend ETFs which focus on higher quality dividends.
Okay. You've brought a couple of examples. One is the Vanguard Dividend Appreciation ETF, VIG, the ticker?
Yes. VIG invests in companies that have been increasing their dividends for the last 10 years at least. Top holdings are Walmart, Coca-Cola, and Procter & Gamble. Expense ratio is 13 basis points, and it pays out a yield of 2.22% currently. It is the largest and most popular dividend ETF.
Okay. And then also a dividend ETF by Schwab.
Yes. The ticker is SCHD. It is the cheapest, one of the cheapest dividend ETF, charging just 7 basis points in expenses. Payout is a decent level of 2.68%. Top holdings are Procter & Gamble, Chevron, and Johnson & Johnson. It invests in companies that have been paying dividends for at least last 10 years, last 10 consecutive years, have a minimum market cap of 500 million, and also meet certain liquidity criteria.
Okay, pretty interesting. Do you own either one of these?
No, I don't.
All right, there's other interesting ETF material in the ETF section of Zacks.com. Now, if you're not there already watching this video, all you have to do is go to our homepage, Zacks.com, and scroll down until you get to the ETF module near the bottom of the page. And then there are story links in that module that'll take you right to the ETF section of our website. With Nina, I'm Terry Ruffalo.